Mutual fund industry in India nowadays is growing very faster. People are switching from traditional investment to they are investing into stocks and mutual fund. The return we get from the stocks and mutual fund, it is very good if you compare to other asset class. That's the reason people are switching from traditional investment to they are investing into stocks and mutual fund. But many new investors they are confused about whether to invest in an active mutual fund or whether to invest in a passive mutual fund. Hello friends, this is Vijay and welcome back to my channel. If you're new to this channel, please subscribe my channel and don't forget to hit the bell icon because you'll be getting lot more update with regards to investment. Friends, in this video, I'm going to discuss about what is active mutual fund, what is passive mutual fund, what is the advantage and what is the disadvantage. At last, I'm going to conclude which one is the best investment option. You can stay till the end because you'll be learning a lot in this video. Let's get started. First, I will discuss about active mutual funds. Active mutual funds are professionally managed by the fund managers, experts. These experts are they are going to buy and sell the stocks periodically. The portfolio construction, asset allocation, everything will be taken care by these fund managers. The one major objective of this active mutual fund is they want to beat the benchmark. They want to generate a return more than the benchmark. When I say benchmark, it can be Nifty 50, it can be Sensex. If Sensex is giving 15% return, these active mutual funds they want to generate a return more than the Sensex. For that we call it as a alpha. So there are a scenario. So some mutual funds, active mutual funds, they are not able to beat the benchmark. In that scenario, the passive mutual fund investment will come into the picture. Then what is the passive mutual fund investment? The passive mutual fund investment is nothing but it will simply replicate the index. So it will simply buy the stocks according to the weightage of Sensex or Nifty. So in the Sensex, we have 30 stocks according to the weightage. So you will be buying each stock. For that we call it as a passive mutual fund. When you invest in a passive mutual fund, your returns will be according to the index return. If index is generating 15% return, even you will also get 15% return. If index is generating 10% return, you will also get 10% return because these passive funds are simply replicated the index. These passive mutual funds are very popular in Western countries and developed market like a US because that markets are already developed. But if you compare India, so India is a still growing economy. India is still developing country. That's the reason passive mutual fund investment still not much popular. There are many chances the actively managed mutual funds they are going to beat the benchmark. Then should we invest into active mutual fund or passive mutual fund? Friends, instead of getting into the confusion, instead of getting into the debate, so let's find out some solution. Friends, we have three solutions. So first one is you can invest into active mutual fund and passive mutual fund. You can have an exposure in both the mutual fund so that you can create a diversified portfolio. The second option is if you believe, if you feel that in a longer run, active mutual funds they are going to do well in the future, you can simply invest into active mutual fund. If you feel that in a longer run, passive mutual funds they are going to create huge wealth, they are going to do well, you can simply invest into passive mutual funds. Once you decide and once you take the decision, you should stick on to your decision. Friends, I hope you enjoy this video. If you like this video, please subscribe, please to share it with your community. If you want to learn more about investment, you can explore my online course. Thank you.